Forex market has been quite quiet. However, the Euro Aussie dollar has been one of the better trending pairs. And we'll go through that right now. So what you can see on the top of you, what you can see at the top chart is the weekly time frame. And at the bottom is the daily time frame. So straight away, you can see I'm looking at a much bigger picture. I even do go up to the monthly as well. But just to keep things simple, I go through the monthly, the weekly, and the daily. So weekly and daily, you can see in front of you. And on the left-hand side, you can see my watch list. It's quite an extensive watch list. So I start at the Aussie dollar all the way down to the South African rand, Japanese yen at the bottom. So it's quite an extensive watch list. Now, if you start with the weekly time frame, you can see that it's a naked chart. There's nothing on there. So I'm going to start loading on a few indicators. The first indicator that I'm going to load on is weekly 200 moving average. Now, the weekly 200 moving average acts as a major area of support and resistance. So as you can see, price is now heading down. And we've got the weekly 200 moving average about, I'd say 246, about 500-600 pips away before potential support level for price. Okay, so the weekly 200 moving average acts as an area of support and resistance. And beyond that, I also look at these support and resistance levels. Now, these support and resistance levels, let me just simplify it a little bit further. Right, so a challenge that many traders face, especially when they first come into trading, is knowing what are the areas of support and resistance to take into consideration. Now, if you take every level into consideration, you're going to find it quite hard pressed to actually find areas where price can trend, because every few pips there's some sort of level that price can potentially bounce to the opposite side. I eliminate that process by looking at a much bigger picture. So the pink lines that you can see in front of you are the highs and the lows of previous years. Okay, so this here is the highest point of 2013, and this is the lowest of 2013. So you can see that it's quite a significant distance between the high and the low, and that is potentially where price can continue to trend. So as price is reversed at this point, we could see price head down. If it breaks through the weekly 200 moving average, then we could see price potentially head back down to the low of 2013. Okay, and to simplify that even further, I only look at the previous 2 years. So here's the high of 2013, here's the low of 2013, here is the high of 2012, here is the low of 2012, 11, 10, so on and so forth. These two sets of pink lines are the only two that I'm looking at. Okay, so the weekly is what I look at for major areas of support and resistance. In addition, I also look at round numbers. So if you have a look, what we've had is a head and shoulders formation, which was confirmed when the neckline was broken right here with this red bear bar. So we had a head and shoulders formation, but we also had a tram tracks formation just below the figure 1.60. So this was acting as an area of resistance. Now, it's not exact. Now, trading is not an exact science. It's not always going to happen 100%, but we've got some kind of resistance zone where price failed and started heading back down. Now, when price starts heading back down, I then look at round numbers for target level. So my first target level would be 1.5. When price breaks 1.5, it's targeted 1.4. Now, I'm waiting for price to target 1.3. However, we have got the weekly 200 moving average for price to contend with first. So price could come to the weekly 200 moving average and bounce to the upside. However, if it breaks that, then I would like to see it target 1.3, and then the pink line and the 1.2, which are pretty close. So there's a support zone cluster around this level. So the weekly 200 moving average is giving me a much, much bigger picture of price action, and I'm looking for much larger trends. Rather than trying to be in and out of the market on a regular basis, I'm looking to get in at some point and hold that position for as long as possible. Okay, guys, is that okay? Can I just get a yes so that you get a good understanding of that? Yeah, brilliant. Thank you. Excellent. Brilliant. Thank you, guys. Okay, so now what I'm going to do is move down to the daily time frame. Now, the daily time frame, again, as you can see in front of you, thank you, FX Boyke, is a naked chart again, and I'm going to go ahead and load up the other indicators that I look at on the daily time frame. Right, the first indicator that I'm going to load up is the daily 200 moving average. Now, daily 200 moving average is also an area of support and resistance, similar to the weekly 200 moving average. But the daily 200 moving average also acts as an indicator that gives me a bias in price action. So what I mean by that is when price is above the daily 200 moving average, this is a bull market, and this is where I'm looking to buy. And if price is below the daily 200 moving average, this is where I'm looking to sell. It's the simple moving average. Again, not much difference between the exponential and the simple. I just tend to stick to simple moving averages. Okay. If I just compress price data, you can see that when I last started buying on this currency, this was going back to last year. And you can see that we had nice bull trends. Here's the first leg where we traded. Then we went through an area of consolidation. Then we had a second leg up. So there were two legs in which we traded. And you can see that is because price was above the daily 200 moving average. Now, here is where price started coming back down. But this is not where I started selling, because we are above the daily 200 moving average. It's only when price broke through the daily 200 moving average, this is where I started selling. Now, one thing you should notice about this is that there is a certain level of patience that's required when being a trend trader. This is not a quick style of trading where you're looking to get in and out as quickly as possible. We're waiting for the best possible setup. We're waiting for the probabilities to be in our favor. Now, remember that while this is setting up, it doesn't mean that I'm not trading. I do have other currencies, as you saw on my watch list, and I do have other stocks that I have on my watch list. So while this is maturing, I'm trading other pairs. So I'm moving my risk from currency to currency and stock to stock. As soon as my software and my analysis told me that we're below the daily 200 moving average, this is when I started looking to sell. Now, another indicator that I'll use, I'm not going to keep it on, but just to give you guys an idea, is using a filter such as the XTL indicator. And you can see that the XTL indicator, as it starts heading down below the daily 200 moving average, starts turning red. So when you're below the daily 200 moving average and you're getting red XTL bars, what I'm getting now is a gathering of events. I'm getting things coming together that suggest that I have more chance of making a profit than a loss. And that's what we're playing on. In trading, nothing is guaranteed. That's why we always want to keep our risks small. However, once we're in a winning trade, we want to stay in that trade for as long as possible. Okay, I'm going to base analysis purely on price action. So I'm not going to keep the XTL on here. I want you guys to get really familiar with understanding price action as a trend trader, purely based on looking at price. Indicators are useful, but remember, indicators are mathematical formulas that are based on price. So price comes first. So you can see that when price broke through the daily 200 moving average, this was our first opportunity to enter. Now, after every break, we tend to see a pullback and some kind of retest. Now, it broke above the daily 200 moving average because it came back to retest the strong half round number of 1.50. So it came back, it broke through, it pulled back, and then this is where we've been trading the Euro Aussie dollar since May of this year. Aggressive traders would have got in around April. The more conservative traders would have got in around May. Aggressive traders tend to get in on the first breakout. Conservative traders tend to get in on the second breakout. So there's no right or wrong answer. It's just a style of trading should be dependent on the kind of character that you have. You can see that when we did get that initial breakout, now again, notice that price never shoots in your favor. Another mistake that traders make is that as soon as they get triggered into a trade, that they want to rush into profit. You know, a trend is a function of time. If you eliminate time, you eliminate the trend. If you eliminate the trend, then you eliminate easy profit.